Blockdag is still selling, even after listing. Should you be worried? Look at the crypto market. Since August 17th, Bitcoin and many other crypto assets have been moving strongly bullish. Bitcoin moved from around $62,716 to above $73,600. That's more than a 17% move. But then, look at Blockdag. While the broader crypto market is showing strength, Blockdag continues to behave very differently. And this brings me back to something I talked about before: market risk versus execution risk. Because if the entire crypto market is falling and your token is falling with it, that's market risk. But what happens when the broader market is strongly bullish and your project continues moving in the opposite direction? Now I think we need to ask a much harder question. Is this still just market risk, or is the problem becoming project specific? And this is where I want to talk specifically to people who are still holding Blockdag, especially those who have invested thousands or even tens of thousands of dollars. I'm not here to tell you what decision to make. I'm not here to tell you to sell. And I'm not here to tell you that Blockdag must fail. But I do want you to stop for a moment and ask yourself some uncomfortable questions. Because sometimes the most dangerous thing for an investor isn't losing money. It's continuing to believe in the original story, even after the evidence has started changing. Think about this. A token has already been listed on exchanges. Months have passed, and yet the project continues to offer ways for people to acquire tokens through what is effectively another form of pre-sale or early sale mechanism. Maybe the name changes. Maybe the terminology changes. Maybe the package changes. Maybe the mechanism is presented as something new. But ask yourself, is the fundamental economic function actually different? Are new investors still being invited to put money into the project in exchange for tokens? If yes, then you need to think very carefully about what that means. Because once a token is trading on an exchange, there is already a market price. So here's a question I think every investor should ask. Why would anyone continue buying through a project-controlled sale at a price that can be significantly different from the price available on an exchange? Especially if the project is offering tokens at a price that appears lower than the market price. Think about that. If you can buy the same token on an exchange, why would someone pay more through the project? And if the project is offering it cheaper than the exchange, who is absorbing that difference? What happens to the market when additional tokens continue entering circulation? What happens to existing holders? What happens to price discovery? And perhaps the biggest question, why does the project still need this mechanism after listing? I'm not saying these questions automatically prove wrongdoing. They don't. But they absolutely deserve answers. And this is where I want to introduce a concept that I think every crypto investor needs to understand: execution risk. A project can have an incredible vision. It can have a powerful narrative. It can have a large community. It can raise hundreds of millions of dollars. It can produce beautiful presentations. It can make ambitious promises. But eventually the market stops evaluating what the project says it will do. It starts evaluating what the project actually does. That's execution. And execution is where confidence is either reinforced or slowly destroyed. Now look at the bigger picture. Bitcoin is moving strongly. Other crypto assets are participating. The market is giving risk assets an opportunity to demonstrate strength. But Blockdag is behaving differently. So ask yourself, why? Is it simply market structure? Is liquidity the problem? Is confidence declining? Is token supply creating pressure? Are investors disappointed? Are expectations not being met? Or is the project having difficulty executing what investors originally believed they were investing in? You don't have to accept my interpretation. In fact, don't. Do your own research. Look at the data. Look at the token distribution. Look at the selling mechanisms. Look at the exchange prices. Look at the project announcements. Look at what was promised and compare it with what was actually delivered. Then ask yourself, does the current reality still justify the confidence I had when I invested? That's a much more important question than when will the price recover? Because if your only reason for holding is, I already invested so much, that's not an investment thesis. That's emotional attachment. And the more money you've invested, the harder it becomes to admit that your original thesis may have been wrong. This is called commitment. You don't want to believe you made a mistake, because accepting that possibility means confronting the loss. So instead, you search for another explanation. It's just temporary. The market hasn't discovered the value yet. The exchange is manipulating the price. Once the next announcement comes, once the next phase launches, once adoption comes, maybe any of those things could happen. But there's another possibility you need to be willing to consider. What if the problem isn't that the market doesn't understand the project? What if the market understands something you don't want to see? That's the seed of doubt, not panic, not FUD, just the willingness to question your own belief. Because blind confidence can be just as dangerous as blind pessimism. And this is why I keep coming back to one simple principle. Don't just listen to the narrative, watch the behavior. If a project says one thing, but the economic behavior tells you something different, don't ignore the difference. If the market is strongly bullish, but your project continues falling, don't automatically assume the market is wrong. If the project keeps creating new ways to raise money, ask why. If the terminology changes, ask whether the underlying mechanism actually changed. If the token is trading on exchanges, ask why another sale mechanism is still necessary. And if the price available through one channel is dramatically different from the price available in another, ask who benefits and who carries the risk. These aren't accusations, they're due diligence questions. And you have every right to ask them, because this is your money, your savings, your capital. And if you've already lost thousands of dollars, you don't owe the project your remaining capital just because you've already invested so much. You owe yourself an honest reassessment. Think twice, then think again. Not because I want you to hate Blockdag, but because I don't want another investor to lose thousands or tens of thousands of dollars, simply because they stopped questioning the story. A project doesn't become legitimate because we believe in it. A project doesn't become successful because the community believes in it. And a token doesn't become valuable simply because we bought it at a certain price. Reality eventually has to meet the narrative, and that's where execution matters. So when you look at Bitcoin moving strongly bullish while Blockdag continues moving bearish, don't just ask, when will Blockdag recover? Ask, what is the market telling me? And then ask an even harder question. What am I refusing to see because I want my investment to succeed? That question can be uncomfortable, but it can also protect you. I'm not telling you what to do with your Blockdag. I'm telling you to do your own risk assessment. Check the facts, check the token economics, check the sale mechanisms, check the actual execution, check the market behavior. And most importantly, don't let the amount you've already invested prevent you from making a rational decision about what happens next. Because sometimes the most expensive mistake isn't buying a bad investment. It's continuing to invest in it after the evidence tells you to think twice. Do your own research. Do your own risk assessment. Think twice, because your money deserves more than belief. It deserves evidence.